Hey guys, welcome to my first YouTube video about cryptocurrency, finances in general. I was inspired by Crypto Savvy, seeing him to post his video basically starting from 0 subscribers. So thanks Crypto Savvy. So in this video, I want to talk about a few things that I don't see a lot of people talking about, if at all. And that is a fundamental understanding of any data, any information that's coming our way. We have people posting their opinions, we have people posting the numbers, 60-30%, and you know, what does that all mean? Like, is that enough for you to make a decisive decision and be successful in trading and investing? And the answer is maybe if you trust the person, but that kind of goes against the whole consensus of don't trust but verify. And you don't need a lot of understanding, just few basic things for you to distinguish which information to trust and which information to discard. And that's what I want to talk about today, you know. And then after this video, hopefully you'll be able to understand the fundamental nature of market movements. How does that relate to laws of physics and all laws of nature, and of course how we can trust the laws of nature to come to fruition, as opposed to just going by a hunch or somebody else's opinion. So all right, so let's start. First I'm gonna go and talk about cycles, then fractals, and then patterns and waves. Now cycles. What is so special about cycles and why we should trust cycles? Well, cycles exist in nature, and if we look at a so this is a cycle of a Earth temperature over thousands of years, right? As we can see, there's a quite actually similar chart than you see every day in trading, right? And this is just the Earth temperature over thousands of years. How can it be so similar? Well, it is very similar, and it's not a coincidence, and it follows the laws of nature, right? So we have cycles and waves because of planetary movements. We have electricity. We have many different waves. So basically what I'm trying to say is that you can trust the cycle. Right, and you probably have seen this chart, and I don't know exactly. I think it's made by Kunal Sen. If and of course, when it was posted, a lot of people were saying, "Oh, I don't believe this. I don't buy this," and it's like, well, can you really say I don't agree with it? How can you say I don't agree with cycles? And of course, the answer is no. You cannot make that claim, and you can of course make that opinion, but if you, let's say, browsing to Twitter and you see somebody saying that, you know how to verify, right? So you always go with the cycles, especially longer periods of time. Trust the cycles, they always happen, right? Now, and you can see the pattern developing here, right, with the RSI, and this will be followed, right? If the laws of nature remains the same, this will follow, right? So that's what I'm trying to say about the cycles. This is another example of temperature and CO2 over thousands of years. Again, look at how close it looks to our trading charts, right? And what does that mean? Like it just measures the energy, essentially just measures the energy. And the Bitcoin chart is nothing but the collective human psychology on evaluation of an asset. That's essentially what it is, right? So the more people value it, the more energy is kind of being put into it, right? You can interpret it exactly the same, and every single human is a subject to everything else from the planetary movements, everything. One interesting chart I want to show is this is Kondratiev wave, and look at the predictive power of this wave. Essentially, you can see how the economy can affect the violence, and the cycles affect you. The cycles affect the wars, violence, and economy, everything. It's humans are just subject to the planetary movements. Like, I mean, that's not the other way around, right? So whatever decision collectively humans make to go to war or whatever, that is being influenced by other movements. And if you really want to dig into this, I highly recommend to watch the first episode of Missing Links, and it will blow your mind how everything is so predictable, and how yeah, you will see the predictive power of this. Right, so now we determined that cycles happen. You see, you know, there's Milankovitch cycles. What do we do with this now, right? So the message here is trust the cycles. And if you look at the Bitcoin price, let's go logarithmic. You know, it has the cyclical nature, right? And so if somebody comes and says, well, we're going to moon from here, then you can go like, well, wait a minute, that doesn't really follow the cycles. So even if we do, I think we're going to be snapped back in, because cycle is a cycle. So that's how you can call BS on a claim like that, right? And we had a few main figures saying nonsense like this, and you can quickly see how this cannot come to fruition if we trust in the laws of nature at least a little bit. All right, second, I want to talk about fractals. So I'm going to start with the weird picture. I think this is Romanasco broccoli, and I'm going to show how Romanasco broccoli is related to the Bitcoin price. Right, so we all heard the Fibonacci retracement. You know, but what does that mean? You know, so let me explain. Some of you may know it, some of you may not know that, but this, whatever that is, but it's useful information to know. Now you see these buds, these broccoli buds. You have a certain size, then you have a different size and a different size, and a smaller, 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 and they are all at a specific ratio, right? It's almost like design, but this exists in nature, and then you see this everywhere in nature. It's almost like nature has a specific formula typed in, you know, at the beginning of the Big Bang. And you can think about it this way, but it does exist. You can trust it's going to happen, right? So that's what we have. Now, look, you see this pattern, right? Look how it resembles this pattern, right? And look at the Fibonacci ratios, like perfectly going in, you know, and then you can also see this whole kind of representation of this, and this representation of this, and so on and so on. So this is a perfect example of fractals. How does it relate to Bitcoin price? Well, let's have a look. This is what we're looking at. This is essentially a broccoli, essentially what we saw in the broccoli, same thing. How come? Well, it's because we have the Fibonacci ratios at the exact same patterns. So let's have a look. Let's enable support and resistance, and let's draw a Fibonacci retracement. Oh, sorry about that. There we go. There. So what do we see? Well, we see 0.618 retracement, right? Okay, let's look at the next one. All right, from the top to the bottom, what do we see? 0.618 retracement. And you can do this all day long, and you're going to see the exact same thing. This is pretty close, but not quite. 0.618 retracement, and so on. So you can see the predictive power of these retracements. And well, let's use what we have here. All right, from the top to the bottom, and look at the prices. You've probably seen these prices everywhere on Twitter: 4.4, 4.8, 5.2. Right? This is not a coincidence. So if we follow whatever we have here, we will have 0.618 retracement. Right? It doesn't mean it's going to happen, but now you have the target price. So if it does hit this price, this is your shorting area, right? And it doesn't matter if it's going to go through. You don't need to worry. If you trust the fractal patterns, which you should, this is the perfect area to short Bitcoin. And then, of course, you can collect your position at any point below. Like, and you know, I'll talk about this later about capitulation and whether it's going to happen and how. All right, so now we know the fractals work and how it works, right? It's a natural thing, and so on and so on. So it comes to fruition like a lot of times. Okay, next I want to talk about waves. Again, waves are everywhere in nature. You have you know, particles moving like waves. You have ocean waves. You have heart waves. Waves are everywhere. They're very predictable. And one thing about waves, for example, sine waves, to borrow the metaphor, it's not even a metaphor, it's exactly the same thing. For example, what happens when you have the potential energy, a particle moving at an ever increasing frequency and being squeezed in a smaller and smaller space? Right? There's a potential energy increases so much that it has to explode. Right? It's not going to be held in that space. It has to, you know, get out of there and expel with the force. That's what we see in the Bitcoin price as well. Again, it's nothing different from natural things. Let me give you an example. For example, you have, what do you have here? You know, you have ever decreasing volatility. You have ever decreasing volatility. Well, actually, you can draw a triangle over here. You have ever decreasing volatility, and you have this frequency, right? So we're going higher and higher and higher and higher and higher and higher and higher, higher. And then obviously this is a huge potential of energy right here. It's being squeezed into the small space. So you understand that there is a big potential of energy. All of this needs to expel somehow, right? So let me disable log so we have a little bit more better. All right, so now what does that mean? Does that mean it's going to hit this area? No, it does not mean that. It means that this has that much of a potential. This energy will happen, so you can kind of see that you will have that much volatility, and you can curve this around, right? So like you can see the potential, and you can draw it in a trend line. Basically, you have this length, so you can go like this. Then you have, you know, like this, and so on and so on. But that's your potential energy being released right there. Yeah, let me clean this up. And this is everywhere. You can see it on 4 hour, 8 hour, whichever way you look at it, right? Look at this. I'm going to show you how, like I said it sometime before, that like there were like a one trade a month in the last 3 months. And this is what I meant by that. That this is being obviously squeezed in, and we had a lot of potential going up or down, right? And And then there is a certain predictive power that you can use from the sentimental analysis. And you can do that. I'll show this later. All right, so second trade we had here. All right, but you have to understand one thing is that you want to short in the bear market and long in the bull market. You don't want to have a habit of longing the bear market. Why is that? Well, if you know what you're doing, you can do that. But if you don't, it just is not worth the risk. There's so much more potential in making so much more profit in shorting the bear market. And when you're placing your position in the bear market, you have much higher confidence it's going to go down because the gravity is going down, it's not going up. So so there you go. This exactly what I showed about the waves earlier. Exact same thing. Have all this potential going quicker, and being squeezed into this. Again, how do we know it's going to go up? Well, with this one, we don't really know, but it doesn't really matter. You know, how come it doesn't matter? Well, let me explain. Now, if we know that all of this potential energy is going to be expressed, right? So that means that there's a lot of potential for profit up or down. It doesn't matter which way. How do we catch it? Well, it doesn't matter which way you position. As soon as being squeezed, as soon as you see the price being squeezed, position in, let's say you take the short here, you know, and you can take the short with a significant portion of your portfolio. And then you see the reversal and you see your position didn't come to the fruition. You take it on the chin, you take the loss of those 5% or whatever, and reposition yourself for the, you know, upward trend. Just like that. You make a sacrifice in order to get a much bigger gain. So it's okay to sacrifice 5% over here to get whatever is here, which is, I don't know, it's like it's a lot, about 30%, I believe. Yeah, it's a 30% increase. So it's worth to sacrifice 5% to get 30%. That's how you can, every time you see the squeezed position like that, just start playing it, you know, just make the sacrifice. It's okay to make the sacrifice. It's worth the gain because you see that all this potential energy is going to be expressed and you're in for a treat. Same thing here. It's a smaller time frame, right? Same thing here. Look at the wave. All this potential energy going boom, 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 and it has to go somewhere, right? Again, here, you didn't have much information here which way it's gonna go, up or down. You know, you had everybody actually expecting to go up, which sometimes means that the market manipulators are gonna do the other move. So it doesn't really mean, but it doesn't matter which way it's gonna go. You position yourself here to short because you expect to go down, and you see it actually not coming to fruition. It reverses. You take the loss and you position yourself here. So now, because now you see all this potential energy has to be expelled, so it's gonna go somewhere. Again, it doesn't mean that it's gonna straight up. It doesn't mean that. But it will have a lot of volatility. You can have a lot of volatility like that, or straight up, or like this. It doesn't matter how it's going to happen, but you see that there's going to be a lot of movement here, and we're seeing the beginning of that. So, and so that's cycles, fractals, and waves, and how to understand that. Why don't I think that it's going to go up to 0.618? Even though it has the potential to go there, because of what's happening here. So basically from the waves and sine waves, you can see that as I talked about, you know, they're breaking out here. And why did it broke down? Why didn't it break up? So right here, look at how many more shorts than longs we had at this period, right? So everybody wanted to short here because it just looks like a triangle and it's just very well, I wanted to short. And then like, oh, that didn't happen. So they give up, and then you have longs going here, and that's when it happens. Why? Because it's profitable to initiate that drop there. Like, I mean, the market makers can make the drop from here to here, but it can initiate, they can initiate, and it was very profitable for them to initiate the drop. So now we have same thing forming over here. Look at the how many people wanted to short over here. It's not unlike this one, right? So you have all this, and you have this coming out. So this is very dangerous for you to long, you know, because too many people are longing, and it's very dangerous for you to long. That's why I would, you know, refrain from longing this. We're still in the bear market, and I would wait. You know, if we hit 4.4, 4.8, 5.2, you see that any of this target price is good to short. So that's it for this video. The next video I'm going to talk about bear market signals and how to know when the bear market is ending. Again, to just do your own due diligence and don't trust what people are saying, and so on and so on. Then I'm going to talk about capitulation and how to know what's going to happen and what is likely to happen, and people are saying 30%, 60% that will already capitulated, and so on and so on, and how to do your own due diligence again, and to verify that, and you know, and to understand yourself. So I hope you liked this video. Click the like button if you did. Click the subscribe button for more of videos from my point of view. Thank you for watching. Bye.